Welcome to the first episode of the Capital Compounder Show. We're very lucky to have on the show today Dan Matlow, the CEO and founder of VitalHub, as well as Brian Goffenberg, the CFO of VitalHub. Gentlemen, thank you for joining.
Thanks for having us, Robin.
So I do believe, in my opinion, and I am biased. Full disclosure, I do own shares of VitalHub. I'm a very happy shareholder. VitalHub is Canada's next billion-dollar company. Your market cap is right around 500 million right now. You're halfway there. You just need to double. Year to date, the stock in 2024 has been basically a three-bagger. It's up three times since 2020. I believe the revenue and sales are five times the 5x. But before we get into the company now, Dan, take me back way before VitalHub. Were your parents entrepreneurs? How are you brought up? Like, what motivated you right from the beginning? We've got to hear it.
Oh God. I grew up in Kitchener-Waterloo as a young man with two divorced parents, with a mom and a father. And my father was still pretty active in our lives. My father was a real estate broker, and he, we came home every day seeing a real estate broker, and though not come home every day because we were divorced, and so there definitely was a lot of inspiration watching him do deals and do things like that. My mom was a single mom, and she worked at Sears, and she was the top sales rep that was there, and so sales was always in our family. And I remember in high school or day school winning, I think it was high school or day school, winning the most sales chocolate bars for a charity, and winning this, I think it was a 25-pound Hershey bar or something to win that award. And then we were selling pens one year, and we won that award. And we entrepreneurs. My summer job when I was young was I took my brother, because I had a great uncle at the time. When he came over here, he sold garments to Mennonites, and he said, "Hey, why don't you guys do that for a summer job?" And I said, "What are you talking about?" And my father, because in the old days he used to own a clothing store, he took us to Toronto. We went to all these wholesalers, and we loaded up an old hatchback car that we had, me and my brother. And my brother bought a straw hat, I remember, to try to look like the Mennonites. And he had this new wave haircut going on in the 80s. And that's how the Mennonites used to dress. And like the girls were actually looking at him. It was like this hilarious story. But yeah, we did that probably in my last year of high school. And then my, first couple of years of university, we load up the car, and for like 8 weeks, we'd run around the country. And I think I made three times what, my friends or other guys made in 8 weeks that they would make like in 4 months selling stuff to Mennonite. So yeah, we had an entrepreneurial family. My mom, I guess at some point quit Sears, and she opened up with my sister a carpet cleaning business. The franchise is thematic, and my sister was ahead of me 4 or 5 years, and she was the number one sales rep for a lot of big name organizations that work there. And then she started joining the business. She doesn't even have a university education, and she started joining big corporations at senior roles, and has advanced her career like crazy as well, right? So a lot of inspiration from what I saw, what my families did from a business perspective, and just saw it from a bunch of different directions very young. And I keep telling my kids, like I'm 62 years old, and I've never applied for a job. in my 62 years. And I'm a CEO of a public company and have never applied for a job. I just made it happen.
That's just awesome. So sales has been in your blood, and you're really motivated, inspired by your parents. You saw them every day, hustling and doing just that. And you grew up in the Kitchener-Waterloo region, which now, as we know, has blossomed into basically the startup capital of Canada. Um, so take me forward a little bit. How did you get into the healthcare field afterwards?
You know, you everyone thinks as an entrepreneur, you plan your route and you go your route, and sometimes you just stumble into your route. So I'm a urban studies grad from York University, and I played a lot of team sports. Played football. I think team sports are really important in terms of helping management skills and getting team and learn how to work together and learning how to inspire and work with your teammates all the way through, and big believer in that. But yeah, there was a company that I had a little company that was sold to this other little company that was VC based when I was really young, and I think I was employee number 10 or something in that company. And we had this piece of software that really had no utility yet. It was like this role based access system, like just based on what your role was in the organization, you could get access to a system and you could easily add users and link users. Like that's real common these days, but not in the mid 90s. It was a new concept, and we were looking for something to do that, and then there was someone added a single sign-on version of it, so we were selling with just single sign-on for systems in the mid 90s, and we came upon this hospital. I think I remembered it was Ohio State Medical University. Like we was a Canada, and the guy liked the concept, and the thing wasn't half baked, and we just went and we finished it, and that was my first exposure to hospitals, and that product went on to install itself in about, I don't know, 70 implementations across the United States. And the company went through the .NET era and then eventually sold off to OpenText and so forth. But yeah, that was my first exposure to healthcare. And then just since that, had worked in that domain.
And that obviously got you hooked. And tell me about MedWorxx. I believe it was called MedWorxx. It was a publicly traded company. You ended up selling it. You were the CEO, and I think you really cut your teeth there at MedWorxx. Is that right?
Yeah. It was like as I said, I had a company that was called SDLC Technology before, and then that merged with this other company called Core Change, and then Core Change eventually got bought by OpenText, and I was running the healthcare division at OpenText. And again, back in the big companies, I started in the big companies. I was young, and back in the big companies, and we were doing a little bit of M&A, and this small little company came across my desk, and it was too small for OpenText to go by, and the thing wasn't just it was in distress and was really just about to fold up, and it had about, I don't know, half a dozen customers in Canada doing some things, and I just went to OpenText and said, I don't think you guys want this. No, it's too small. I said, hey, it's been really good, but I'm ready to go back and do something on my own. And we I worked with the secured creditor, and we put that business into bankruptcy, and then bought that, and figured out a way how to buy it out from the lead creditor, and off we were with MedWorxx again.
Excellent. And so, what did that teach you about yourself, Dan? Is that like were you bored at OpenText? It just wasn't a company for you. It's a big company, company culture and everything, politics.
Yeah, the move from OpenText to MedWorxx was the scariest thing I think I ever did, because the other ones I sort of started out when I was young, but all of a sudden, and I was making a little bit of money till then, and it was good, but I just had that entrepreneurial thing in my blood, and OpenText was big and bureaucratic, and it was sort of driving me a little crazy. But at the same time, I was coming home to a wife and three growing kids, and I was making a pretty good salary, and probably didn't have enough of a nest egg to start a business. But I'm starting to get into my you're starting to get into your 30s at that point, right? And you got families and kids and in the whole bit, and you just went through this whole crazy .NET era in the 2000s, and you watch things grow and crumble and so forth. But I was sitting at my computer. I remember one day, and I just went to my wife and so forth and said, I think I'm going to do this. And the next thing you find is like you're on your GoDaddy, right? And then you're like, okay, what are we going to call this thing? And I need a name. And what websites can you get? And you're pulling out your credit card, and you're picking 7 different names, and and then it's like, okay, this is starting to get real. But at that point in my career, I built a lot of contacts. So, there's people that believed in us. Like a company was going into receivership. I didn't own the company. It had about 7 employees that weren't getting paid. And you needed those 7 employees. And we were running these customers. The hosting vendor turned us off, and we're running the hosting underneath a desk on a little computer, and that's the hosting environment, because the main hosting environment turned us off because the bills weren't getting paid. And you're telling the lawyers to hurry up, I got control of this stuff, because you don't know if you're actually going to pull this off. And the lawyers are like, okay, they're friends of mine. I was like, you might never ever get paid on this, but please hurry up, because I don't know if this is going to happen. And we got the deal, and off and running we went. And the good thing, and I had people that were joining me at MedWorxx that worked with us way back in Core Change. Like you build a ton of loyal relationships. I got employees and friends at this point in the game that just worked with me for years, right? So you just keep moving.
And MedWorxx, the core offering was patient flow monitoring. Is that right?
Yeah, it was a single product. Well, it didn't start that way.
Okay.
It was you're looking for things all the way through, right? So it started off as a platform, as a content management platform, which those weren't ubiquitous in those days, right? And this was a healthcare based content management system, and really to build, in those days you would call them intranets, and external websites as well. And we had this platform that we used to use, and then the company was also in the process of building a learning management system. And we walked into the 4 contracts that for the learning management system, and you had 4 customers that already paid for it, and nothing was delivered. Like there was no product. and and we're going, hi, I'm the new owner of this, and you're speaking to these hospitals. This is our first exposure to Canadian hospitals. Like I only worked in U.S. hospitals ever before that, and I had some of my guys that worked in the U.S. hospitals working for us, and they walked into Canadian hospitals and like, what's going on here with these guys? This is a way different type of buyer. But yeah, and then we had to go back and build that learning management system for them, and they gradually turned around, and then we got more of those intranet and those internet sites, and it became a business. But I just knew that wasn't going to take us to the promised land. And then St. Thomas Elgin Hospital came. Some broker said, hey, they built this internal product that actually had some pretty nice implementations through all of Canada, and they just didn't want to be a software company, and actually were mandated not to be a software company. So they sold it to us for shares and became a partner with us at MedWorxx, and we built that product used to be called Continuum, and then it got branded to MedWorxx after that, and that was really our pure clinically based product. But the learning management system and the other system were pretty good systems too. And those things were pretty profitable, but we used the profits from that business because we knew that business wouldn't get us to the promised land to fund the other business that was doing it right. And that was a real learning tip. Like you sort of knew that, and that's definitely something that's come from VitalHub is to find those assets that can sell and use the profits that you're getting from those products that sort of sell but aren't really, don't have a big TAM, don't have a big market, but you can run it still pretty cheap, keep customers happy, and use those profits and put them into those products that can take you to the larger, the promised land, or to take you that. And we did that at MedWorxx, and that strategy worked pretty good. We didn't have to rely on the capital markets that much, but we used that did it, and that's where we built the MedWorxx product that we was really the core product and was for all across Canada, and then got heavy into the UK, and then got heavy into Australia and France, and we started learning about the international markets a lot more for government funded based healthcare.
So that promised land, patient flow monitoring wasn't the offering from the get go. Basically, this is how you built now
Yeah.
VitalHub. I think it's like 60 to 70% of revenue basically is in patient flow monitoring, and there's a big TAM, as you say, total addressable market. So take me from MedWorxx to the founding of VitalHub. How did VitalHub come about? I'm seeing mixed dates. I'm seeing 2010 online. I'm seeing 2016. I believe it was 2010 that VitalHub was officially started. Can you tell me about the beginning?
Yeah. So we're sitting there at MedWorxx, and we're wondering what to do with it. And MedWorxx went public in '08, and then did a capital raise in 2012, and Brian joined us just before that as a CFO. We've been together since, and it it we had some shareholders that would have preferred an exit, and I've been doing this. You got to remember back to the open text days, right? And you're starting to this, and it'd be nice to get an exit underneath my belt, and put a little bit of security and so forth in the rest of my life to go do it. So we did the exit, and got money, and got my family in a pretty good position. It wasn't the be all position of where I thought I should be after all that hard work, but it was still pretty good to go do that. But we learned a lot at MedWorxx to go do that. So MedWorxx sold to private equity, and at that point Brian was usually the CFO goes before the CEO, and he exited, and he started doing some consulting work and other things along there, and I'm doing work at the private equity based organization, and I knew this wasn't going to be for me, but I wanted to take a good look at it and learn a few things. It's always good when you make some transitions. You're working in your own world to go spend in between careers as an entrepreneur, to go look at the new company that bought you, because you're going to learn some bad things, you're going to learn some good things, but you're going to learn. So we learned some pretty good things, and it was a good private equity, and it was an M&A company as well. But I already learned a fair amount of M&A at OpenText, and bought and sold a bunch of companies, and have done some transactions. So the transactions really became fun to me, right? Just doing those deals, and and the phone rings, and it's an agent or something that was like who I knew, was saying, "Hey, do you know the company VitalHub?" Yeah, I've met them a bunch of times, and they got this pretty cool mobile app based structure, and I know it pretty well. And he goes, "Well, they're just in financial trouble, and there's this lead investor, and would you come over and and clean this thing up for us. And I, grabbed Brian and we went and talked to the lead shareholder and talked to the things. And here I am again. It was the same deja vu when I'm sitting at my desk when the opportunity came across at OpenText, and it was like, hang on, this might be onto something. This is the platform again. And I said, here we go again. We did a transaction where we bought VitalHub. So you're right, VitalHub was started in 2010, but the real VitalHub was, when we took it over, was 2016, 17, somewhere in there. So they were floundering, losing a ton of money, and it was just totally mismanaged and stuff. But it was good little stuff. So we took the lead shareholder and was just putting in, I think, $180,000 a month into this place. And it's like, what are you doing? And he said, I can't do this anymore. But I really don't want to. So we worked out a deal, and where we would buy VitalHub and, for some money and give royalties back. But it was always never meant to sell that product. We learned through the MedWorxx days, and Brian and I talked about it a fair bit during the days as a strategy, and saying, there's a roll-up strategy in this with all these small companies and government healthcare. Like, we've been, I was on the road for years at MedWorxx, and I'm seeing these companies, and I get to know these companies, and I know the entrepreneurs that are running them, and I know them all in Canada, and I know all this stuff, and they sort of have a lot of the same profile that MedWorxx had in some ways, and a lot of different makeups. But I just said to myself, I think we can actually start putting these things together a little bit, and it would make sense. And it's like, but we need some synergistic value. And I said, hey, I BCare is a company I know that was working for a while, and I knew those guys, and I knew Vidget, and I knew that they had this offshore development group that was there. And I said, well, that has to be the cornerstone of what we do. We have to have the ability to run an offshore development group. But I knew nothing about running an offshore development group at that stage. And we do the VitalHub transaction, but we had these two companies in mind that would be our first two. So we took VitalHub public with the exact same group that took MedWorxx public on the same CPC. And those guys trusted us and knew our stuff. And we raised a little bit of capital, but the intent was, okay, okay, Brian, like, we really don't care about dilution. The first time we cared about dilution, we wanted to own shares. We care about dilutions as fellow shareholders, but this is an M&A model. Like, you got to raise capital and you got to go, and it's better to own less of something that's bigger and make something go. And that was always the mindset of where our brains were at from that point in time. So we started, we bought VitalHub, and shortly thereafter we took it public with our group, and they raised us a little bit of capital, and off we were. And we had to go on to the next obstacle and say, this is real good. We don't really have enough money to run a business, and we got these two companies that don't really like each other, but it makes sense for them to work together, and we can broker a deal to go acquire both of them and get them what they need. And off we went to try to figure out how to get capital and to make those transactions. And we got very creative on those two transactions with a bunch of different things, like on those transactions. And it was also during the cannabis era, and we're public, and Brian and I are going across Canada, and I'd walk home at night and go to my wife, and I'd say, do I smell like weed? It's like, it's like, because I'm not getting any money from these guys, because all the cannabis guys are, but that's all they wanted to talk about. And,
exactly. You're probably thinking, Dan, I should have started a cannabis company right at that time.
Yeah, we're going like we should have started a cannabis company. We got no money in the bank, and we got to get these two deals done. And we got bankers that sort of are talking to us, but not really. They don't care. And we had to get money to get these two things started, and it took us, I think, and then we announced the deals to try to tell people why we needed the money, because if we just told them we needed money, that wouldn't work. So we announced the deals, and then they made us halt the stock. So the stock got halted for like 6, 7 months, and the initial investors are like mad as hell that the stock is halted because they can't get out and they don't know what's going on. And but yeah, we got creative, and a lot of friends and people we worked with in the past, and we finally hobbled enough money together to get creative and we got those two transactions done. It took about 9, 10 months, and really that was the, once those two transactions were done, things have I would say, yeah, that was the really, okay, we got a foundation to do this.
Lots of challenges in the very beginning, and VitalHub sounds like a turnaround story, right? Like it really is. In the early days, the lead investor, the lead shareholder, was that the Shen family?
In
Who was the lead
VitalHub?
investor? Yeah.
No, no, no,
Okay.
no. It was a private investor,
Okay.
and he, he just had enough to do that. We met the Shens, I think, about 3 years into it
Tell me about
already.
that.
Yeah.
Tell me how that came about, please.
Brian is doing his thing, looking for investors on the side, and found some guy on, probably on LinkedIn. His name was
LinkedIn,
Rise,
yeah.
and the guy took a call and took a presentation from us, and he was in the U.S. And he said, "You guys are onto something, but this isn't for me. But I think I know someone that might be interested." And okay, and I had no idea he was doing it. And it's like I'm in the office one morning, and it's like, we got a meeting. Okay, we walk in the meeting, and there's Francis sitting in our small boardroom, and tell me about you guys. What are you doing? And what's going on? He goes, telling the whole Astra story. And he goes, I wish I was in software, and the gross margins are great. I'm I'm telling him about, this is what the theory was. He thought it was great. And we had a couple more meetings, met in a Starbucks, and he brought in his brother Tony, and they liked it. And he brought in some other, Alan Brett, who's the CFO at Descartes, and a guy named John Tabaya, who was with the legal counsel at Astra, and they all did a round, and and Francis said, "Hey, I want to be part of this. I don't just want to put the money in. I think I can add value to do it." And as an entrepreneur, you always get scared about that. Like, are they adding value, or do they really know what they're talking about? Are they trying to get control, or are they, what's this all about? And you're hoping for the best, but like sometimes those things can be disastrous. And it's just worked out really well. It's they added good value to what we were doing, and good ideas, and they were always open to listening to our ideas, and we were been open to listening to your ideas, and they've turned into good additions to the team. I was always in the not always in the belief, for as you get older in your career, you get more secure with what you can do, and it's like, this is not an easy problem. The more eyes on this thing, the better it is, and different perspectives are good to go. And so it's been good from our perspective. They've been helpful in the deals, and we like having them around, and it's turned into a good relationship.
That's a great story. So connecting with Francis and Tony Shen basically started with Brian hustling and searching on LinkedIn, which is awesome. Getting that meeting, what sealed the deal for Francis and Tony? What was it about the business that they said? Like you mentioned, gross margins, of which I believe VitalHub is over 80% now gross margin. But what really sealed the deal about the business itself, the vision, the addressable market? Like, walk me through that conversation.
I think we met with them, and we just talked about M&A, like backing on and running those software companies, and the different M&A models in Canada. From the he literally did a bunch of research in on how Constellation runs and how Enghouse runs, and Alan Brad, his former his former CFO at Descartes was, I mean, at Astra was now at Descartes, so he definitely knew a fair bit about that. And we just talked about M&A, and I did the same research, right? And I just knew M&A, and it was pretty obvious that he could see that I knew what I was talking about, and it was pretty obvious for me that he knew what he was talking about. Like, we just understood business and what the ideas was and what our vision, and he truly understood what our vision was, and he got on board with it. Right? He said, "This is going to work. Can you execute in the so forth?" And but you never know. But I think we just all got on the same page of what this thing could be, and we thought this would be like a really good demonstration to the public markets that our model could be viable. And if he was part of this, it would be a good demonstration to the markets that this could potentially work. And I wouldn't say actually bring the investors in, but at least let the investors, they're going to listen with a little bit more open ears at that point in the game, right? So I think that really was a helpful channel to getting more institutionals into the story, right? Astra had a lot of institutions, and it was an opportunity for us to really get the institutions into the story.
So enterprise health software, patient flow monitoring, you realize, Dan, early on that it's a fragmented industry. There's a lot of entrepreneurs, a lot of offerings, a lot of businesses out there. There's an opportunity to consolidate. I believe you've acquired, since coming on board with VitalHub, 20 companies, integrated them successfully, have absolutely grown the business that way, but there is also organic growth. But walk me through how have you formed that merger and acquisition division of VitalHub? Where are you sourcing the people? What's your criteria now? How do you source deal flow? Just walk me through all that, please, if you don't mind.
It's one of the advantages of getting older is you get to know a lot of people, and
Hmm.
the other thing you get to know is your kids' friends that are pretty smart, and you get to see newer ideas and newer things that are there. But yeah, I worked at OpenText, and we did M&A, and the Vista Equity Partner Group that bought us, called Appian, was an M&A company. And the short times that I was there, I really studied their methodologies really effectively. So we we hired this young guy named David Kovac, who has just been phenomenal for us in terms of sourcing deals and working deals, and he's out there, and he's a CFA, and he's a CA, and he's works 18 hours a day, and he's a bright young man to start with, but he's an experienced bright young man now, right? 6-7 years later, and he just had the abilities. And I sort of knew the companies that we wanted to go acquire, and then he did research, and other people that we had there were doing research in the companies, and we put databases together, and you just sort of have the conversations with them. And the one thing I've learned is healthcare people know how to talk to healthcare people, and they're much more comfortable talking to healthcare people and talking business problems and what the solutions do and how these things come together. Sure, they like talking deals and money and all that stuff, but they really get frightened by that stuff a fair bit. A lot of these guys, like, yes, they know they're there and that's their what their exits are and the whole bit, but you sort of got to have the ability to make them feel comfortable, like that's part of it. But how can we work together, right? And so we've taken the strategy of let's speak to as many people that we can. And the worst thing we do is we build partnerships, or sometimes they're formal, but they're informally. They know we're here, they know what we do, we know what they do, and and as we come across things and we see that people need, we'll flip those companies leads, right? They're not really, they don't want to sell yet. They're still trying to get their business. We don't have that thing yet, but yeah, let's go. Hey, yeah, we look, okay, I came across this company here. Go flip them a lead, go give them a contact, go give them something, just something to go stay in touch with these companies about. And it's really genuine too. Like we're trying to help these guys out. And so, here we are 6, 7 years and you've built all these relationships with this ecosystem. And, when we first started, we were like this little thing, but that we're sort of like becoming the bigger gorilla on this thing, but they're not that intimidated by us because we've been following them for a while. And following them in a genuine way, not in a business way. It is truly is genuine. Like we're all part of the same ecosystem, and we're all trying to solve. There's a lot of issues in healthcare, and I am a big believer in what our software does. Sure, this is really good economically, and we're doing stuff, but we're saving a lot of lives every day. And we're making these places more efficient. They're making less mistakes, and they're they're doing better care because of what our things do. And at the end of the day, they're in the business of saving lives, and they're doing a better job. They are saving lives. So really, that's the core of what we do. And sure, economically, this is a really good story. There's a stock, and that's a fun part of it too. But the both come together.
Awesome. So now that you're eyeing your 21st acquisition and beyond, the deals I assume are going to be getting bigger. Do you find that as the deals do get bigger, you're getting into the space of Constellation, Enghouse, even Well Health? How are the dynamics of the deals change, the prospective deals?
Yeah, some ways bigger deals are easier than and smaller deals. A little bit more. They're a little bit more understandable of the whole thing. Yeah, I'm trying to I met with one of our lead institutions the other day, and we talked about evacuations. Sure, we're in a position to do bigger deals. I still think our bread and butter is doing smaller deals, and maybe we can do more smaller deals in a year that equal bigger deals because we got our infrastructure put together a little bit better. But at the end of the day, a bigger deal or a smaller deal are all driven off of the exact same metrics, and we try to stay away from the noise of like who are we competing it with and what's the valuation and so forth. Like we model those businesses on what it's worth to us. And we got our own parameters that we go deal with it. And yeah, we might see some bigger players for the bigger deals for sure. We still think we're in a pretty good position for those things, but our bread and butter is still going to be our smaller, $3 to $7 million revenue type deals.
Okay. And this might be a question for Brian. Brian, I just saw on the news, I believe you expanded the credit facility with Scotiabank to 65 million, but it still remains untapped, right? The credit facility. If anyone looks at the balance sheet, there's $0 of long-term debt, which is a huge selling point for VitalHub. What's the strategy there? Expanding the credit facility to 65 million. Like, is this preparing for bigger deals?
Yes, it's just another lever for us. So, we like the zero debt and we'd like to continue that as long as possible, but we've got a fair amount of cash on hand. We've got north of 50 million at the moment after the last two deals. Plus, we're generating about 4.5 million a quarter. So, we'd like to be a natural compounder. We just think this is another lever for us. It gives us that opportunity if we do a bigger deal or we do need to go into debt. We're not big debt people, but we are prepared to use it in the right opportunity, and that's why we've put it in place.
Okay. This leads to one of the readers' questions that I have on X.com. I have followers in there and investors in VitalHub. One of the questions from the investor of VitalHub there was about share dilution. There is some share dilution, and that shares have been used obviously to acquire companies. What's the roadmap there? Like how will you be financing these acquisitions going forward, and if you can talk about the share dilution, please.
Listen, our goal is to be a compounder, which means the cash we produce goes back into the business to go buy other companies. And if you read the numbers or look historically, good, we're definitely on track to get there. We're partially there already. So it's hey, so the compounder areas in our horizon, and in fact, we're there depending on what the size of the deals are that we need to do. But it doesn't mean if the deals come at us and they make sense and there's more deals and we got cash for that, we got to make decisions of it's debt or we raise more equity based on the size of the deals and the speed that the deals come at us. So that's just where we are in our growth plans. But I think you can see where the trend is going, and as long as we're producing the rule of 40 base max and we're still producing the amount of cash, and the bigger we get, the more cash we're going to be generating, and at some point that need for capital just won't be as needed as before.
Okay. I'll break into some more questions from investors of VitalHub that have, of course, they sourced on X.com. Someone wants to know, what is the total addressable market for VitalHub if you can apply a dollar figure?
We try to look at this from a bunch of angles, but I think if you look at us as an M&A company and if you take 1% of the budgets of the organizations that we address that, and they say they spend 1% of their spend on software, we see figures from 1 to 3% in our analysis. But if you use the 1% number, which we think is conservative, it's a $10 billion market when you look at the total spend of what they're spending on software on a regular basis, right? So as we acquire more companies again and more spends, and we're trying to get a piece of that software piece of the pie, it's about a $10 billion marketplace in the Mideast, Australia, Canada, and the UK.
Did you mention the US there, Dan, at all?
No.
In the market? You
No.
didn't. So this is an important point. So why not the US?
As I said to you earlier, Robin, I spent the first 10 years of my career selling in the US, and I think we sold the core change single sign-on solution about 75 different hospitals. And it was a good run. I know the US, and that's why we're not in the US. It's a different business driver, and it's also this really big TAM, a TAM that brings in private equity and brings in VC, and you don't want to be competing against that $4 million a year company or $3 million a year company with a new idea that just raised $50 million and has ramped up this big team and really doesn't care about costs and just will sell at any cost in those markets, right? So the public market does not have that concept near to what it does in the U.S., and it's more than enough TAM, and we don't see private equity coming out to those markets. They don't understand those markets. They got issues with those markets. So we got that niche there, and we just want to stay in it for now.
Okay, and the UK health system, I assume, is set up similar to Canada's. Is that right? So something that you know.
UK and Australia and Canada are set up very similar, and the Mideast is, if you look at most of the senior execs in hospitals, they're NHS people, so they buy a lot of NHS systems.
So if we just hone in on Canada, out of all the hospitals, do you see yourself being like VitalHub software being in the majority of hospitals? Is that the vision?
Is it in the majority of them? We don't just sell to hospitals, right? We do sell to hospitals. We sell to government. on transitioning care between hospitals and understanding those transitions of care between healthcare organizations. So government buys us, and we sell to the community social services marketplace a fair bit as well. So hospitals are a component of ours, but I think we're going through an exercise right now where we're centralizing all of our contracts into a central repository, but we're holding like 3,000 contracts at this point. It might be 1,200 contracts, but it's 3,000 contracts of different add-ons and pieces and so forth that we have there. So we're in a lot of places.
This is a good segue to another question from X.com, another investor who's curious to know if you're looking at different provider-centric acquisitions in the future, for example, pharmacy serving businesses. You'd like to know?
Not at this stage. We like B2B businesses, bigger dollar size enterprises, and we're not really into individual. So we haven't done anything like in the physician electronic health record based business because it's typically like a 15 user license or a 5 user license. Sure, there's some bigger organizations, but they're not large transactions, and they're still pretty complex software to implement and so forth. So, but we haven't gotten to that stuff. And pharmacy, no, we I don't think we're looking at that. Our TAM is really the B2B larger based organizations.
Okay. Another reader question is, and you mentioned Constellation Software. There are incentive-based programs at Constellation, for example, open market purchases of shares in the market. In each of the companies you acquire, maintaining a certain return on capital. Are there the same incentives or similar incentives, Dan, that you have across VitalHub?
We have not put anything formally like that in place. Doesn't mean we won't in the future. Each of our transactions are different, and there are a lot of key employees that do have options and share plans and have own equity from their previous company if they took some of our equity in our program, but nothing that's been formalized yet.
So that could be formalized in the future.
Yeah,
that's what I'm hearing. Okay. Talking about volume and price action from 2016 through 2023, VitalHub was basically flat, and then 2024, just huge catalyst happened. What was the catalyst? What was the driver in the volume and the price action this year, if we hone in?
Of the stock?
Of the stock, yeah.
I don't know, maybe smelling salts. Yeah, I don't know. We've been the company's been the same. The business model's been the same. The trends have been the same. I actually think what happened with the biggest thing from people in the early days is they're never going to produce financial results, and it's just going to dilute, and it's just going to go in this your same M&A story, and they're never going to get free cash flow and so forth. And that we started to show that in 22, 21, probably even. We've been making adjusted EBITDA for a long time now, but the numbers started getting bigger and so forth. And I also think in 2023 we only did one acquisition, so we had a bunch of quarters where we showed our financials without acquisition costs or using cash for acquisitions, and they could see the trend over a 3-month period on the business model, which made it a lot clearer, I think, for some of the institutions to buy into this really. And it gets convoluted, right, with acquisitions and reading those financial statements that accurately, especially if you're not concentrating on them as hard as you probably should be. So I think that's really where it started going, and we went to this conference about in, I guess, was it, yeah, it wasn't even a year ago, I think, and it was more of a smaller cap. We used to go to these small cap things, and we just were back there for a long time, and they asked us to go, and like we were the best company there by far, and a lot of those retail guys just started getting on like this, like literally we got home Monday and the stock started going. They saw the story and this thing's undervalued, and then momentum creates momentum, and then just things started happening.
Yeah, I'm seeing it. I'm seeing it on X.com on the investors that reach out to me. They're seeing VitalHub as basically the next, the baby Constellation software, right? The serial acquirer. Sky's the limit, basically at this point. Um, Probably a question for Brian. If we hone in on return on equity, what's the goal there for ROE, return on capital overall for VitalHub?
Return of capital. We think that there's a huge runway still. You look at the valuation we've got now is probably definitely for us higher than we've ever been from a multiple, whether it's of adjusted EBITDA or of revenue, and it's not it's higher than most companies at the moment, just because I think the market has gone down significantly. So from 220, if you look at the healthcare software companies, they were trading at probably about on average 9 times revenue in Canada and 19 times in the States. We never hit that in those days, and now we're suddenly probably about 5, 6 times revenue and 20 times adjusted EBITDA, maybe it's slightly higher. So we think we've finished the first innings. We're going to the second innings, and let's see where it can go and how much we can add if we become a true compounder and are able to generate enough cash to make these acquisitions. I think you'll see two things. One, the equity dilution will be less because we'll have enough cash and we'll be generating enough cash. And two, we may go into use some debt, and that'll also slow down the equity component. But as Dan said, I think earlier, we've never been shy to use equity, just because we feel as long as every shareholder that's put in money into the company is in the money, and we're pretty happy about that. We've always tried, when we did a raise, to make sure that it was pretty conservative, that people had the opportunity to make money, and we'll probably continue to do that, and just see how well we can do. And we think the model's proven now, and let's see where we can go.
Thanks, Brian. Dan, what's been the most transformational acquisition to date out of the 20 that you'd say has really moved the needle for the company?
the we're sitting there, we're starting this model, and we're ready to go to the UK, and we did this acquisition of this company called MCAP, which is really small and only had 3 or 4 people in the UK. So that was okay. They're running by themselves, and we knew those guys were working it. And COVID hits, and we're sitting there at home working on these computers, and we're doing our job, and like all of a sudden, these 2 acquisitions, In Touch and Transforming Systems, were deals that a transforming guy I didn't know, but we knew In Touch for a while, and we met the In Touch guys before COVID, and I knew and did stuff, but we never met the Transforming System people ever, and we're doing these transactions, and we're on Zoom, and it's new to COVID, and it's like, okay, we're going to do this. I can't believe we're buying 2 companies and we haven't met face to face. And I still remember telling my friend, like, it's not a big deal now, I guess, as much, although as you're sort of used to it. But those, like, back then, it was like, are we actually going to do this? And we did it. We pulled the trigger on In Touch and Transforming, and In Touch, both of them had like earnouts and these aggressive growth earnouts that they put in place themselves, and what they thought they were going to do, and we discounted them both times. Like, okay, like this isn't gonna. We don't think this is going to actually happen, and they they've done pretty well, and they've sold a lot of software, and the 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 two key players in the UK are the guy that was running In Touch and the senior player that was running Transforming, and yeah, I think that was a big it was good. There's a lot of new organic growth that's been driven off of that, so probably that would be the one.
Hmm. What's something about VitalHub that most people might not know but should, Dan?
Uh, we're people say, yeah, it could be the next Constellation or mini Constellation, and yeah, there's a part of that in terms of our our a consolidator approach to what we do, but we do like organic growth, and we're trying to systematically build these acquisitions, using financial metrics, but also what these products do in a lot of cases, to do that, right? So, still, at least on the patient flow side, that we've accumulated a really compelling group of solutions that the narrative is pretty strong. I think a lot stronger than anyone can offer definitely in the markets that we offer on a comprehensive basis of what they all do. So, our challenge right now is to message that better, and get our sales reps more in tune to it, and that will take some time to do. But we still think I still think although we're getting growth by cross selling to a degree, I still think there's a way more potential to get some of that cross growth going a little bit more, and we'll keep doing the model. So that's where we're trying to take this, and yeah, it's to me, it's more than a consolidator. It's consolidation for sure, and it's an important part, and we're good capital allocators, but it also is, there's a method to our madness.
What are some books, Dan, that you've really enjoyed, as an entrepreneur reading, as a business builder, as someone who's right in the thick of merger and acquisitions? Like, what are some book recommendations that people can pick up?
Oh God, believe it or not, I'm not a huge reader. I work and learn and read a lot of research and on companies, and I I spend my night reading financial statements and MD&As of different companies, and just researching what those companies do, and other than that, I read sports. I used to read a lot of the Donald Trump books and a lot of sports inspirational type of books I like to read on a free time. A lot of biographies. I've read a lot of World War II books over the years. I'm intrigued by history. But yeah, as far as business is concerned, I don't have a business degree. I'm self-taught. I've never, I've taught myself how to read financial statements, and I've taught myself how to analyze and do business all the way through that type of stuff. But yeah, that's what I do.
That's really awesome. Donald Trump's Art of the Deal. I'm sure you've read. I've
Yeah,
read The Art of the Deal as well. Yeah.
and there, in the early days of my career, you know, my first job was sales, and gone sales boot camps, and a lot of different sales methodologies, a lot of different sales techniques, and that's the area of the business that I stick my nose into probably more than I should. Um, uh, Sales and marketing is definitely where I like to hang out, and in offices and in part of our businesses. So that's sort of what that driving portions to it, but not near as much as I used to. I actually let our sales guys, leaders, do a lot more than I used to. But yeah, I've read a lot of sales groups, taken a lot of sales training over the years.
That's just great. And we've learned today you went from being the number one chocolate bar salesman in the
There
Kitchener
you
Waterloo
go.
region to now
That's
building Canada's next billion-dollar
yeah.
company,
Now I
which
remember it
is
was like
awesome.
Howard Robertson Public School in Kitchener Waterloo to this. So yeah, it's just I think you got to believe in what you're doing, and you got to take risk a few times, and that's what you got to do.
And what's a typical day for you, Dan? I think people are curious. As soon as we close out this podcast, what's on the docket for the rest of your day today? Just totally curious. A day in the CEO.
Just looking at my teams right now, I got we're in budget mode right now, so we're
Yeah.
going through the budgets. We're integrating our last two. We're meeting with our two new companies to go through their budgets. Um, we're modeling a bunch of companies under M&A, so it's getting on the phone with that team and seeing them presenting some models. Yeah, there's transactions that are cooking, and getting on the phone with the brokers or those guys with the transactions, and in between is like calling our guys that run operations and listening to all their headaches and what they're doing, and looking for me to get them to not jump off a cliff type of thing. And but they always get it done. So, but yeah, it's my typical day is doing that. We're also working pretty hard at putting processes in place for growth, and Pat Mesa joined us as our CEO a while ago, so he's a lot of new systems coming in place, and we're monitoring how that's going on. So there's never a shortage of things that are going on here for sure. It's meeting after meeting, and if it's not a meeting, your Teams is ringing all over the place, and we're talking all the time.
What's your favorite aspect of being CEO, Dan? What's the best part of the job for you?
Uh, you know what the best part of the job is actually seeing the growth and seeing things develop and seeing a plan that you see it's rewarding to have an idea, and you sort of know, but you don't really actually know it can actually happen, and you pivot along the way to a degree, but at the end of the day, the methodology, like, hey, I thought this would work and it worked. So that I find that very satisfying, and both Brian and I also find really satisfying is mentoring young employees, and really seeing and being encouraged by their development and their ideas, and watching them struggle and do things, and moving in the other direction. But yeah, I get a lot of satisfaction out of that, and but I think the biggest satisfaction I get is when I go to a customer after an implementation, and they're really happy and they like the software, and they present something like, hey, like we're actually doing something meaningful here. We're saving lives, and at the end of the that all it all motivates me. But for me, I really think of three things every day, and all three of those being satisfying is I think of our employees, I think of our customers, and I think of our shareholders, and all three of them I think of equally. And it's the balance of all three that has to be important for a business to succeed. It can't all be shareholders. It can't all be about the employees, and it can't all be about the customers, but all three of those are really important to me.
Is there anything, Dan or Brian, that we missed today that you want to mention for the small cap investor perspective, or existing, or an entrepreneur? Is there anything that we missed talking about you want to put on the table?
It's been pretty comprehensive. Just the message to the young entrepreneur is, you know, find a problem, go create a solution and go sell. I get a little irritated during the dot-com era, and my son had a software company, and he did really well off of it. But when these young entrepreneurs say, we just raised Series B, $20 million of blah, 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 and it's posted on LinkedIn, and they're doing that, and I'm going, so what? Right? Like, you know, go build a business, right? You haven't done anything yet, right? And shame on you that you needed the 20 million. Uh, like why? And that should be your last resort, right? In terms of that, go get something that's sellable and go make that happen, and use money along the way to help you get there, but really carefully, and don't get so excited that you know, you're running around in a fancy suit and going to bars, and you just raised 20 million bucks and telling people you just raised 20 million bucks, because guys like me are going to be running around in about, 5 years from now, when your 20 million runs out and you don't got anything left, and you're having to sell that business because you didn't run that business, right? So I think that's the word of advice: is business, right? And don't get enamored by anything else.
I love that, and I'm sure your investors will love that too. Profitable growth, frugal all the way through. There's just a very disciplined approach. That's exactly what you want to hear from a CEO of a public company. Brian, is there anything that you want to add that we may have missed here?
Sure. I think just a couple of things I think to add to Dan's sort of points. I think anytime you're going into business, that just be cautious, be real, do your due diligence when you're looking at, especially when you're looking at companies, small cap companies. There's a lot of noise out there, and a lot of hype. Be be cautious, and the other thing is you don't have a business until you really are accomplishing a few things. I think one, you got to fill a need for a customer. Two, that need, people have to care enough about that need. And then if they're not prepared to pay for that thing, then you really have nothing, because capital is only coming in from your customer. You only have customers if you've got a real business. And I think you've got to be, there's a lot of hype and there's a lot of stuff around that. You got to make sure that it is real.
Okay. And there's a call coming in. So sorry for keeping you a little bit longer, but gentlemen, thank you very much for the
Okay.
conversation. And I hope you have a great day. Thank you.
Nice job. Bye bye.
Thanks, Robin. Thanks.